Greetings everyone, Jake Bernstein here with the 2Chimps.net Chimpcast for the week beginning the 4th of January 2016. We want to wish you all a very wonderful 2016, best things ever. Happy, healthy, and wealthy to you. So, this recording being made at 10:34 a.m. Pacific Time on Sunday the 3rd. Let's take an objective look at the markets, as we always do, and let's not talk about politics or news. Let's just look at the markets objectively. When we do that, and by the way, please feel free to drop me a line if you have any questions, and we go to the daily chart, based on our indicators, no evidence of bearish divergence setup or trigger, no sell triggers whatsoever, everything remains in a bull trend, with stocks and the S&P at support or close to it as of the end of the day on Thursday. The trend remains daily bullish. Weekly, similar situation. No sell triggers. The market right now above support, support being 2014.25 on the S&P nearby contract. The monthly pattern is still bullish. And having said all of that, remember, we've been telling you that there is considerable resistance around current levels. You can see we've been up there a number of times on the daily. We've been up there even more times on the weekly. So basically, since all the way back in November of 2014, we found resistance in this area a number of times. That is not unusual. What's important to remember is the consideration in terms of what kind of short positions are out there and what the signals are actually saying. Another important consideration for me is the market sentiment. And I want to take a look at the market sentiment as determined by the daily sentiment index, something which I've been publishing virtually, well, not virtually, but actually every day since 1987. So we go to the daily sentiment index chart. Hang on one second. We'll go to right over here. Go to the daily sentiment index chart and bring up the S&P and take a look at what the small trader is thinking and doing right now. That would be right here. So again, this is the daily S&P chart at the top. At the bottom, small trader sentiment. Up in this area, small trader is too bullish, price is likely to decline. In this area, prices sentiment too low, price is likely to rally. This is where the last sentiment low was, right over here, and I'm going to mark that for you. And again, we continue to hover in the very low bullish sentiment range. That is an indication to me that the small trader is still negative on the market, has not been participating yet in the overall bull market, which has been in existence for quite some time now, especially since these two lows over here and these lows over here. If we go on a weekly chart, look at the sentiment, let's spread this out and remove these sentiment lines from here, the lines that I've marked, and take a look at where we are now in the big picture. In the big picture, right now, we are as low as we were, in other words, right over here, just a couple of weeks ago. We were as low as we were back here when we started this rally in advance of this bottom right over here, this bottom right over here, this bottom right over here, this bottom right over here. So I say to you, I can't be negative on the market at this point in time. That does it. Trend remains higher. Buy it, declines to support. Quality stocks, look for bottoms, divergence in some of the energy stocks. Thanks for being here, and we'll talk to you again next week. If you have any questions, drop either Elliott or I a line.